Are you excited about the upcoming bull run in digital assets? Well, today we're going to talk about how to take profits. I'm sure a lot of you have already made investments in digital assets, and I'm sure a lot of you understand the concept of DCA, dollar cost average. So over a period of time, you would make investments, maybe that's daily, weekly, monthly, quarterly, into digital assets. And hopefully you've got some money set aside where you're trying to enter at bottoms, right? So when you see some fear in the market, you see people on the, fear and greed index, they're closer to the fear side. Those are the times when you're making the buys. That way you can average in at a better price. But irrespective, people that DCA or just dollar cost average on specific time frames tend to do pretty well. They'll normally get an average of whatever the bottom was during a bear market. So what do you do and how do you take profits at the top or on the way up in the bull run? Well, the people that I've seen that are most successful with this, they might have exit points, right, where they're selling a percentage of their portfolio. They're not going to liquidate the whole position. Sometimes that's a good thing. Sometimes it's a bad thing, right? Sometimes things pop and continue to run. And if you liquidate your whole position, then you miss out on the 5, 10, 15, 100x, whatever happens beyond that after the double, right? Some people like to de-risk their position, so they'll wait till a certain threshold and they'll take out their original investment, and then the rest is on the house and they let it ride. I like to basically scale out the same way I scaled in. And maybe that's, in crypto, you tend to see some pretty substantial gains, especially when things get going and people speculate on low cap coins. If you're in some of the lower cap stuff, or even if you're in the prominent stuff, you can have some pretty significant upside. We've seen, even just Ethereum off the bottom is close to a 2x at this point. Same thing with Bitcoin, up pretty substantially. And I know people that have, exited those positions, and I know other people that have just pulled, a percentage off the table there. Maybe it's 30, 50, 75% of their holdings, and they've left the rest to continue to the upside. So that would probably be, nothing here is financial advice. Always speak with your financial advisor before making any investment decisions. This is for entertainment and educational purposes only. I'll just speak to what I will be doing during the bull run, and then you can make your own decisions for your portfolio. So with that, as price escalates, if it does run up over a period of time, you might have certain price points or multiples of your original investment that you look to de-risk and take some profit. Would be not my recommendation, but what I'll be doing. So, you might get to double your money and you might take 10 or 15% off the table. You might get to 5x your money, take another 10 or 15% off the table. And when you're doing this, ideally you have stuff that you're going to be allocating those profits to. Hopefully some stuff that you can offset those tax implications with. So I'll give you an example. There's a gentleman that I met in Dubai. I'll be there again next week speaking at a conference. The last time I was there, he talked about his investment in Solana. And we all know how well that's done this bull run, even up to this point. After FTX, he went in heavy. Again, like I talked about, when everybody was fearful in the market. Put a pretty good chunk of change in at the bottom there. And because of that, when it went up, at the time when we spoke, he said, when it gets to $35, I'm going to pull, 30% out, and then I'm going to buy 2 apartments with that here in Dubai. And then, I'm waiting till it gets to 100, and then I'm going to pull, another 70% off the table, and I'm going to buy another 4 apartments with that. And then the rest, whatever's left at that point, I'm just going to let ride. And he had figured out how much the apartments cost, what he needed to make in profit in order to be able to, execute those transactions, if he was going to finance them, what that was going to look like. So that's what I would encourage you to do. Take profits, know at what price points you would like to take profit on things, and then have a plan for those profits to be put into other investments or assets that you could depreciate. He's going to use cost seg on those condos and apartments that he's purchasing, just one door, right? But you can still do cost segregation analysis on that and depreciate, some of those against your taxes this year. He's actually in Dubai, so he doesn't have to deal with the tax implications. But if he was a U.S. citizen, this is how I would think about it. So just think through those things. What am I going to use this capital for? And then maybe work backward from there instead of just arbitrarily putting, I'm going to take 10% here and 15% here and 25 here. I see a lot of people with exit strategies that really just aren't thought all the way through. So I am a fan of scaling out just like you scale in, but on the backside of that, make sure you do have an idea of where those profits are going to go and how you're going to be able to offset the tax implications associated with them. And we can help you with that. We have advisors at Digital Ascension Group that can help you walk through all those things. I'd love to have a consult with you, or you can join Beyond Broke Mastermind where we discuss all this and more as well. So let me know what your exit strategy is. Tell me in the comments below. Is this something you've even thought through? Do you have plans for your investments? Hopefully you do. Hopefully this has provided you some value. If you haven't yet, please like, subscribe, and we'll see you on the next one.